As the U.S. economy weakens and the European debt crisis escalates across the pond, we wondered how U.S. banks are holding up. Here to weigh in is Rich Eckert, senior analyst with investment bank B. Riley & Company. Eckert called the 2008 financial crisis and was ranked by the Wall Street Journal in 2005 as the #1 analyst in consumer and specialty finance. Rich, welcome to the program.
Thank you.
You called the 2008 financial crisis. What's your take on the state of the U.S. banking system now?
You know, it's hard to say what the state of the U.S. banking system is. I won't call it a cover-up, but there's been a lot of regulatory forbearance. There's also been, quite a bit of Fed intervention. So, it's hard to know how the banks would stand up, if there wasn't ZIRP in place, if they weren't able to fund these potentially toxic assets, non-performing assets at zero cost, if they weren't able to defer recognition of losses until their regulators felt that they had enough retained capital and reserves to absorb them. So, as an outsider, it's really difficult to know, unless, you're a Fed examiner or, an accountant at one of those banks, you really don't know.
Mm-hmm. Are you concerned about the potential spillover effects from Europe, given the stress in the banking system over there?
They have little direct exposure to the pigs, but they have heavy exposure to the banks that lend to the pigs, either lending or counterparty relationships. There's, extensive credit default swap relationships, and while all the big banks in the U.S. will claim that they're hedged, what happens if they sold protection to a big hedge fund in New York and they bought protection from, say, Credit Agricole? And then later on, the big hedge fund in New York is still standing and Credit Agricole has been seized. Where's their hedge?
Right. Are you encouraged at all by the actions that the Europeans have recently taken, whether it's opening up that stability fund to buy some of the sovereign debt or to inject capital directly into the Spanish banking system?
Well, it's too little too late. I mean, the Spanish banking system is going to need a lot more than, a few $100 billion. And, no one has been able to tell me where all this money is coming from. Neither the ESM, there's a limit to the ESFS, and the ESM hasn't even been approved yet. Only 4 of the 17 countries that need to approve the establishment of the European Stability Mechanism have done so. Furthermore, 30% of the funding, for the ESM is supposed to come from Spain and Italy itself. I mean, where are they going to get the money?
Yeah, that's a good point. What are the odds that calamity will break in Europe, and what impact would that have on the U.S. banking system, given what you've laid out?
It's hard to care. I would say something like 50-50. There are ways to stave off calamity, but they will come at a very heavy cost. And, one of those costs might be the breakup of the Eurozone. And, or the division of the Eurozone into, a core Eurozone and a soft Eurozone. But at some point, the debtor countries are going to have to be able to devalue their currency, whether they do so as a group or individually. I just see no other way out of this crisis, because, the other part of the problem is, not only the sovereign debt and the insolvency of the banks, but there's just huge trade imbalances between the northern and southern countries in Europe. And, unless you solve those trade imbalances, they're never going to be able to, grow their way out of this problem.
SEC Chairman Mary Shapiro has said that money market funds pose a risk to the financial system and has proposed stronger regulation. Do you agree? Do you think money market funds pose a risk to the financial system and require stronger regulation?
Well, it depends. I mean, back in 2007, 2008, a large part of their assets were these, asset-backed commercial paper, from like subprime, issuers of subprime mortgages and subprime securities. So these are assets that can vary considerably in market value. I would think that some kind of restrictions on the type of assets that money market funds can hold would be appropriate.
Mm-hmm. All right, switching gears slightly, the mortgage market has shrunk for years with the collapse of many of these non-bank lenders and the retreat of large banks like Bank of America. How is the mortgage market holding up now, and what is your outlook?
Well, the mortgage market is, Freddie and Fannie right now. There is no private mortgage market. There are very few, banks and other financial institutions that are in a position, to hold, additional mortgage assets on their balance sheet. They're still in the process of repairing those balance sheets. And, private buyers of mortgage-backed securities and asset-backed securities, still haven't regained confidence in either the ratings agencies or the issuers. Only Redwood Trust, which is just north of here, has been able to issue any kind of securities in any kind of size. And, those are like clean energy. Those deals are, everybody likes to see them, but the economics only make sense in this environment. I think the private mortgage market is still frozen. If Freddie and Fannie are allowed to wind down, I don't know that, the private lenders are in a position or, going to be willing to step into the breach.
All right, Rich Eckert, we'll go ahead and leave it there. Thank you so much for coming on and for your insight.
All right, thank you very much.